Good morning, dear traders, friends. Welcome to the Flow Show. Here we go again. It's the biggest jobs day since all the other last biggest jobs days, and it's not even a proper jobs day, but we'll get on to that a little bit later. Just before we kick off, I just wanted to bring to your attention once again our coaching program. You can catch that at trader-coach.com, where you can get a one-on-one session with any member of the team. Don't forget, if you had to get your first session at a 40% discount, the first hour, 40% discount with whatever coach you decide to pick. So if you want to have a go at that, if you need some extra help with your trading, any subjects at all, check us out there, trader-coach.com. Morning, Kay. How you doing, mate?
Hey, good morning, Ryan. Good morning, everybody. Yeah, I'm doing fine, mate. I need some coaching just to keep up with the calendar. Can I get like a 50% discount, please?
I'll give you mates rates, mate. We'll do the session in a pub. There you go. No charge. We'll get lunch.
Yeah. That would be a nice one.
Yeah, definitely. Right. Well, as I said, we've got this jobs malarkey going on. We'll get stuck into that in a little bit. Let's go over some of the bits and bobs. Japanese data out overnight. Trade balance data. Another big swing in the numbers there. Sort of ignore that number for now. What is looking pretty good, though, is overall activity, exports and imports running at quite high levels at the moment, up in the 10%. So pretty good activity overall, irrespective of the trade balance data. The exports were up on semiconductors and cars, automobiles. As we know, Japan has been investing heavily in chip plants and whatnot, so they look to be bearing fruit already. So anyway, for the economy overall, it's looking a bit rosy, even with the negative trade balance. Over in Germany, we've had the latest report from the Bundesbank, their economic report, saying that output could increase slightly in Q3. A further recovery is delayed, but the recession is still not seen. They said we can expect a temporary rise in the German inflation rate towards the end of the year on energy base effects. They've also put in a bit of warning about wages, which, as we know, is a big topic for members of the ECB. They say the high level of willingness to strike until recently and the widespread labour shortages suggest that comparatively high wage increases will continue in the future. This will probably keep underlying inflation at an elevated level. So they're warning still that even with a softer economy, they're looking at still potential impacts from higher wages and indeed further strikes. So one to keep an eye on there. Yesterday's data, we only got Canadian data really. That was the CPI data, which came in largely as expected. There were a couple of measures on the softer side. Headline CPI came in unexpected 2.5%. So that was down from 2.7%. Then some of these other measures came in a little bit softer. The median 2.4%, the trimmed 2.7%, the common 2.2% as expected. The BOC core, though, that went down to 1.7%. So this was one of the first numbers amongst the majors, core number to drop sub 2%. It did, if I recall correctly, have a little bounce. Previously, we got to 1.6 and it bounced to 1.9, and now it's come back to 1.7%. So this will keep the BOC on their easing path. TD Securities now see a cut coming in September, 25 pips. They were saying that the BOC would stay on hold, but they reckon they're now going to cut in September and then again in October. But they keep their view for a rate of 4% by year end. Kay, do you reckon we're getting another cut from the syrup swiggers?
Well, you know, those numbers, they are in favor of it, especially with McClem still not too nervous about creating a bigger divergence between Canada rates and the US's. Yeah, I think it may plead for an extra cut in September, especially that we are more than likely going to get one from the US as well. So if they go in September, then they still remain roughly at the same distance from the US. So it's very plausible, I'd say, with those kind of numbers.
Yeah, very much so. And everything's on the table as far as those guys are concerned, as we always know. Right, Feds Bowman was out as well, but she was just repeating her prior comments, continuing the line that she will remain cautious in her approach to any change in the policy stance. That's all I've got really on the headline front. Not a lot going on. Anything swung your way, Kay?
Not really.
I don't know if you wanted to mention the Treasury stuff that you put in the newsroom.
Yeah. So okay, that's more like some kind of data point. The market's going into the end of the week with a record amount of U.S. Treasury futures long. Well, I think it is a record amount because if you look at the that level there, it's we haven't seen those levels since anytime really. So there's a massive amount of long futures in the treasury market going into the latter part of the week. We can now call it a triplet. Yeah, the revisions, the tomorrow's PMIs, and then Powell. That I think needs to be noted because. Again, we will talk about it, but I'm a little in doubt about those upcoming numbers. Elsewhere, geopolitics still not looking good. It looks like Blinken is leaving the Middle East without a deal. And really, apart from China trying desperately to underpin their real estate market, but that's like kind of a daily story now as well. They've injected liquidity. PBOC, interestingly, is not fixing the dollar China's yuan below 713 right now. That's interesting to note. So we are turning around their fixing point, which is always perhaps a level where some kind of decisions may be taken by investors or speculators, I would say. We're turning around it, so that may be taking into account all the injections that they do, the special bonds that they may issue and things. Yeah, we may over the course of the end of this week try to pick a little direction in that. But apart from that, in the real news, no, I haven't seen much more.
No, exactly. It's been a bit of a quiet one. Still in a bit of summer markets until we get to September, and everyone's kids go back, and everyone comes back from holiday, and then we pick up the pace again, no doubt. Right, let's look at this jobs rubbish that's coming later. It's not on many calendars, if at all. Okay, it's dropping at 1500 UK time, so 1400 BST. 1400 GMT, 1500 BST, as you can see there, the benchmark coming in. The only expectations we've got are those issued by the banks. So we've had JP Morgan saying it's going to come in revised down by 360. We've had Goldman Sachs with their narrow 600,000 to 1 million call there. Wells Fargo as well in that same ballpark, at least 600,000 losses. So what's really going on with this stuff? Okay, normally the market doesn't bat an eyelid at this data. The reason it's batting an eyelid this time around is because of this super great focus on Fed cuts and when they're coming and how big they're going to be. And, you know, it's a bit like when we had that episode a couple of weeks ago, you know, when the NFP miss and the ISM miss and the market got all out its pram. We're probably heading for seeing a little bit of a mini one of those type scenarios at the moment. Now, what does it entail? Now, these numbers are always revised, okay? And this is a preliminary revision. It's a flash revision, if you like. The full revision isn't done until February next year. But it's also a bit of a rolling number as well. So it's the year up to March this year. Now, there's a lot of spouting off going on. There's talk about immigrant labour is going to have a potential big impact on this number because there's a lot of unauthorised immigrant workers that are counted in the NFP. Don't ask me how. They won't be counted in this data, this revision, because this revision is pulled from basically jobless claims. So people are filing for whatever. And those immigrants will not be in there. So if it comes in, for example, down 1 million, it's revised lower by 1 million, potentially 500 of those million are immigrants who are still working in the jobs market. So it's sort of a loss, but not a loss, if you know what I mean. So there's lots of picking holes to be done in this data. Overall, let the market do its thing. Okay, if the market wants to have a little flap around over a bad revision, let it do its thing. We need to concentrate on what the greater fundamentals and the trends are. Okay, this doesn't mean a big million loss, doesn't mean that the jobs market is collapsing. It's still a positive jobs market. It's just not as hot as it was before. The needle hasn't moved. We are still seeing job gains outweighing job losses. So until that needle moves to the negative and we start seeing negative NFP numbers and widespread job losses, then the market is still growing. It's still a positive. So let the market, as I say, flap around, do what it wants. It's going to forget all about it by the next NFP anyway. It'll probably forget all about it by the PMIs tomorrow or whatever. But definitely by the next NFP, it will forget about it because the market will be back to, well, what's this number going to be this month? No one goes into an NFP thinking, I don't care about this number because it's going to be revised 9 months later. They worry about the number then and now. So we're going to be over this hump pretty quickly. Whatever the market wants to do, whether it dollar's been selling off based on this expectation. And remember, these are bank expectations. And you know my thoughts, our thoughts on bank forecasting. They can forecast the sun coming up most of the time. So why everyone, taking it as gospel that we're going to get minus 600 to minus 1 million, I've no idea. But as I say, that's the markets want to go irrational about it, let them do it. For me, I'll just be picking up the pieces after. I'll see if it does mean anything game changing. Does it mean euro dollar is going to collapse all the way back to 109? I'll let the price action do the talking. So it's going to be a popcorn event, in my opinion. You got any different thoughts on that, Kay?
Well, maybe nuancing it a little bit. I think we are so focused now on those jobs that it will drag a reaction. And but as I've been saying this morning in the room as well, I've got this slight feeling that if we don't get a revision of 600 or 1 million or whatever, but imagine it comes out at 200-300K, there could be a bit of a nasty spike coming in the dollar just because the market is now positioned for a lower dollar already. As we just said on the top of the show, the futures market is very long treasuries. People are selling dollars. We saw from various big funds that they are increasing their yen long positions. And I'm going really, I've got the impression that it's going to be like a mini NFP, as you said, and we may have forgotten about it by Jackson Hole or even the PMIs tomorrow, especially the next NFP, of course. But if we really get a very big revision, the dollar will probably get pounded. It's going to react. I think the dollar is really going to react, and those who have been hammered the most, and then I'm thinking about stuff like yen Swiss, for instance, even the euro dollar, they could put in a bit of a reaction, especially that the market has been continuously selling dollars. So I think the risk for this afternoon on this number is that the market expects too bad too bad numbers, and that's somewhere the risk that I see for this afternoon.
Yeah, and we usually talk about pendulums, but this week it's more like a wrecking ball swinging.
Yeah.
We could get a big, let's call it the extreme, 1 million downward revision, okay, and then Powell comes out at Jackson Hole and goes, well, it's a bit softer, but we're not that bothered. We're not. It's not going to cause us to cut 50 pips. We're going to cut with inflation in mind and everything else, and basically brush it all over. So the dollar could, dump off again on the revision today, and then go bid on Powell if he brushes it under the carpet. So it's difficult to sit in now and go, right, well, I'm going to position for this, because you can't, because 5 minutes later you get something else that could knock you out at the park. So again, I think this is one of those times where maybe you can draw some lines in the sand, pick some levels, trade tightly against them, but you don't want to be just guessing the number. You don't be going, I think the number's crap and I'm going to buy the dollar hand over fist or whatever. Account preservation in these moments. Trade after the event, not before the event.
Yeah, absolutely. I think you're right. If someone's not yet in a position feeling relatively comfortable, and letting that number do its thing, it's a pure lottery to just go in front of it. I must say that I'm like virtually zero in dollar positions, because I've got my gold against my CAD, and that's basically it. And a bit of silver, but I have no other positions like euro dollar or dollar yen, and so I'm really not in a hurry to open anything ahead of that number anyway, because that's going to be the as I said, like an NFP lottery basically.
Yeah, exactly. I mean, I'm traveling pretty light. I'm still long Kiwi, which I've got plenty of margin in, so I don't have to worry about that too much. I've got some dollar CAD down here, but like I said, any other time I'll be piling into this level if we were trading down here. I had some orders in. I've pulled all my orders. All I've got is a little bit of long I took yesterday, which I managed to chop a bit off in the rally after the CPI data. But I'm not interested in putting orders in, because I don't want to see us blow through here. My longs get stopped. I get triggered on sell stops, and it's just a spike, and then we spike back up here, and then I get stopped on the other side. I don't want to get flipped out just trying to trade through a big risk event. So I'm managing what I've got, sit on my hands, and pick up the pieces after. But anyway, these levels are still important.
You're somewhere positioned the same way. I mean, if you look at your Kiwi long but dollar CAD long, your dollar is like kind of net out, perhaps barring a bit of a mismatch, but your positions should be somewhere okay-ish, whatever the number comes out.
Yeah, exactly. And I may even throw out the dollar CAD just to reduce my risk just before the data, because I can always get back in after, should I wish. But as I say, the Kiwi dollar, I've got enough margin space in it that it can do its thing, and I'm not that bothered about it. But as I'm saying, we are on a lot of key levels, and that's important. And to repeat the mantra, where we finish the week is going to be important. If we finish the week, whatever happens above 136, it's going to show up as support again, and then we're potentially going to get a bounce. But if the numbers bad and power's dovish, then we're going to be finishing the week below it, and then I'll be watching this sort of area for it to become resistance, and then trade shorts off of that. I don't need a buy, so I'll just trade this one level. Euro dollar, it's had its break of 111. It's trying to hold this break of 111 so far. We haven't really had a retest down here that's come into a bit of a shorter time frame. Couldn't quite get up to this level, 1150, and these were the 2023 highs going back to July and December 2023. That's why it's on the chart. We got above the 111. Haven't really tested it just yet, not properly anyway. We've got this intraday price action going on here, so we've probably got a bit of support, big figure down to 90. There may be a bit more down at 75. The bigger number is going to be down at 110, 40, 50. But it looks like we're going to be treading water until we get this number, whatever it may be. But when you're speaking of big levels, my big level, let's put it on this one, make it a bit clearer. My big level is the 112. If we get up there, I'm probably going to be very tempted to give it a go. Maybe quite a wide stop. I'll keep it fairly small, but with quite a wide stop to get out any volatility. But I would be potentially looking to give that a go because it is a doozy of a level, as you can see. So those are the type of levels I'll be looking at to trade around this sort of stuff after I've seen what it is and how the market reacts. So plenty of big levels all around. I'll have a quick look at Kiwi again, just to show you what my eyeballs are seeing. So we couldn't quite get up to the next resistance level. I had my levels when we were down here, 30s, 50s, 70s. We got through 30s, got through the 50s, couldn't quite hit the 70s. We're back through the 50s. We're holding the 30s at the moment. So again, another bit of price action that just shows you we've got our foot off the gas and we're in wait and see mode for whatever comes later. If things go my way, we're going to move up to this 62s level, which is a big old level. Again, that will be a pretty significant stretch point for this move, given what's going on with the RBA, the RBNZ and the dollar and whatnot. So I may be inclined to flip to a short or get into a short if we see that level, a bit like the 112 in euro dollar. Not a lot else to look at price action wise. Cable, it just took out this prior high that we saw in July, just by a few pips, but where did it run into trouble? Around the half figure. Been saying this with cable for a while. You've got to look at the half figures and double O's because that's where it always seems to run into a bit of trouble. And now we're just, again, wait and see. 130, 130, 50, see what happens there. Then maybe we go on up to take on these big highs up here. I'll just show you the wider chart on that one as well. So 131.70s is a bit of a level. 132s, as you can see, along here as well. So that's a significant level as well. Have you got your eyes on anything particular, Kay, for today?
Yeah, well, we always have our eyes on stuff.
Yeah.
Yeah, I'm actually eyeing that dollar yen, you know. I've been talking about this in the room as well. And on the back of this, if you go really on a very short time frame, like go down like exceptionally to the 5 minutes or so.
Oh, wow.
Or 15 or 5, yeah. We can see over the past couple of sessions and actually running back through through what we had even while I was off, there seems to be fixing activity. Okay, so this week especially, we have seen as well as on the Tokyo fixing, on the London fixing, we have seen clear dollar yen selling. And I think that goes paired with what those bigger funds are doing. They seem to give their orders on fixing. So there's something that is there. Now we're getting into the end of into the second part of the week with those numbers this afternoon, the PMIs tomorrow. I'm starting to wonder if we don't get anything dramatic, that I'd like to perhaps keep a very close eye on the clock and on the dollar yen, because if I see an opportunity on not too bad numbers also out of the US, I may try to catch a knife somewhere. That is one that it may be even that we don't get the opportunity, because if this afternoon number isn't giving anything in the region of minus 600 to minus $1 million or so, the market may already spike in the dollar. And the other one that I'm looking at, we had and is the dollar rand, but I can show that one.
Yeah. So just on these fixes, you're talking it's 10 to 1 or 5 to 1. I can't remember what it is. 10 to 1, 5 to 1 UK time. So you're talking this period here, and then this period here.
Yeah, exactly. So if you look at that, you see that into those fixings, there's always been some Dorian, well, always that in the past sessions, we have seen pretty fierce Dorian selling, and that I think has to do with those funds potentially leaving orders for the fixing. So that is one that I always like to keep an eye on. And yeah, then I can show the dollar rand if you want. What
Yeah,
else?
I'll pump it over. I just want to answer
Gold
Ali's question, and you
as
can
well.
too. She says, "What do we do with winners riding? Both ride trades almost every time. Same. Do we ride with the same position size, same lot size?" Um, when I'm riding a trade, and again I'll use my Kiwis as an example, it's not all the way through the same position size. So I entered down at 60.10, and all I've done is sit on it and just chopped it 20, 30, 40 pips. Every time I see a rally, I take a bit off, I take a bit off, I take a bit off. I've not had any opportunity to add back into the trade because we haven't pulled back. So all I've done is sit on it and see where it wants to go and just keep chopping little pieces off. So it's not keeping the same size all the way through and sitting on it and doing nothing. I'm taking profit all along the way. All I want to do is just maximize any price action I get. If this is a top, my last cut was at 61.53. So what's that? Sort of 10 pips off the high. So if it drops all the way back and hits my trailer, I know I've maximized as much of this move as possible. And obviously I'm going to get stopped out in further profit as well. I've locked in the rest of it. So it all depends on how you're running something. I don't enter a position size here and do nothing until up here because I don't know where the price is going. So, but riding it is just trying to maximize those profits, slicing and dicing. Kate, you're the same, I can probably
Yeah,
assume.
no, well, definitely, yeah. And just to come back on sizes, and perhaps I mean this is something that our us coaches talk about that a lot, and I think many of us do. I do at least. Um, conviction decides on your trade size. If
Yeah,
you have like a very high conviction, the you know that your risk is going to be bigger, but you are one at levels that you want to be in. Two, you have seen in the fundamentals that something is going to or has a very high probability of moving in a certain way. So that is deciding upon the size somewhere of your positions, right? Yeah, for the rest, I mean, it's the best way that I found, at least, to be in positions, the slice and dice. I do re-add. I do the difference between Brian and myself, perhaps, is I do more rinse and repeat. If I let some go, I try to buy back a little lower. I didn't have the opportunity in gold, unfortunately, but I've reduced that now as well to a strict minimum. But yeah, I mean, it's over the years, it's been the best way to one, keep your account happy and stay in the game as well. I mean, if you a lot of people are telling me that oh, I had a really great position and then something happened overnight and I got stopped out even when I was like really in big profit. Well, if you slice and dice, you may get stopped out because we are always at risk of a news event or a data point which comes out somewhere out of the blue or during our night, like the RBA or an RBNZ or something like that. But if you slice pieces of your position, you may end up, well, maybe being flat or even getting stopped out. You may still have made profits, and that over the years is really my tested way of trading, and that also prevents me from having those moments of like bloody hell, what happened here, and now I'm down 5 or 6% or so, and I need to start all over again. So yeah, in that respect, I mean, slicing and dicing is really a great thing to do. Yeah, that's basically it.
Yeah, I agree with that. The conviction is strong, and also conditions. You got to take the market conditions at the time. You know, again, just use an example. I've got very strong conviction about the 136, 135, 80 level with dollar CAD. Okay, but the conditions right now tell me I shouldn't be trading it or looking to trade it that much because there's a high risk and volatility around it. Something's going to happen here. We're either going to bounce off here and go back to 137, 138, or we're going to break it and go down to 135 or more. Okay, so I've got that great conviction that something will happen at this level at some point. But today, this week, it could just fuck around here, mess everything up without giving any real clues of what it wants to do. I want the clarity, not the murky waters. Anyway, over to you, mate.
Today perhaps I will. Oh, let me. Whoop, that's not the right thing. I was about to share our. I was about to share our chat here. Okay. Yeah, I know that some people are looking at the metals, and I'll show the rand in a little bit. There's this little zone here up at 30 in silver. You look at it in the past, it's always had a bit to say it, and I call those traffic zones, right? It always had something to do around 30, and yesterday again we ran up to really close to 30, and we're shying a bit away of it. Now, with what's going to come out this afternoon, if we get like a mild negative, let's say minus, well, mild. Define mild. If let's say we get like minus 4, 5, 600, not like the 1 million, this could actually blow the 30. But if we get a number which is less bad than what the people expect, I think we could actually get back somewhere into the 28s, where then I will perhaps look at picking some up again because it does look very impulsive and very positive still, this one. So I'm looking for a pullback here to start to add tinies to my longs, but if it really comes out bad, this is probably going to shoot. But again, if it's really bad, I think there's a better instrument that's going to hold, and it's gold, right? I see Angela, you're short, and I think it's not a bad thing. Because I reduced most of my position right now. It is to me the level, and I know the 2500 is here as well. I guess there's already a little fib level around there too. But and yeah, this level, if it breaks, but to me really, what would make it retrace deeper is 24.80.85. If we get back down below this 24.80.85, I'm going to let my the rest of what I have go. If the number comes in really bad, I think this one is probably going to get another impulse higher, right? Because this is, as I've been saying on the shows as well, it looks as if gold is somewhere the concentration of everything that can go wrong. I wouldn't say, but everything that goes on, lower yields, geopolitics, and protection against some things like central banks apparently have again started to buy gold. And if really we get a really bad number, this is probably going to shoot. Now, let's look at I can quickly look at dollar yen, but I don't have like an enormous amount of very close levels. To me, there's something going on. Well, perhaps around the mid 145s, then 144, 60, 70, and it's in a very short term, the bounce, it's a retracement level, but also in the more medium term, the 144s had something to say. And I'm going to pay close attention to what's happening if ever we get there on a bad number. And also, as I've been saying before, with the clock in mind, see if those funds or money managers still have dollar yen to sell into fixings. And this could also be an interesting one for the same reason. If we don't get a very bad number and if we get a spike after the release, if then by fixing time they start to sell this thing again, perhaps it's going to provide us with an opportunity to buy a few. So this is one that I'm particularly going to be interested in if the number is not as bad as expected. If it's really a bad one, we're probably going to test lower because all those yen buyers are going to be comforted again by what's going on in the US jobs market, right? So I wanted to have a look at what's going on in dollar rand. It's been coming down. Apparently, there's been a bit of. I was trying to catch up on what was going on during my absence. So there's dollar in here, but apparently there's been a bit of investments or so going on in South Africa as well. Now, it needs to be said that we got a lower CPI print earlier today, and we are back trading right above this 1780 level. This is your risk around here, I think, around 1765 as well, which was a prior low. This is your risk, but if the number this afternoon doesn't come out as bad as expected, I would not be surprised to see this creep back up to 18s. All right, this is something that I'm also keeping an eye on in case the number this afternoon doesn't come out as bad as expected. All right, so this is what I'm looking at. There is CAD yen. Okay, there is CAD yen. I haven't looked at it for a while. It's been extremely violent, right? So I'm going to have to update my charts a little bit. So we had this big move lower. First of all, let's put a few fibs on there. Where are we? 107.40. Yeah, I've read a few people selling against this here 108.80, the prior low. If people want to be long yen against anything, you need to look at some of those prior lows where we dropped through early August, and then we had the spike higher, just matched it again, and then came back lower. So this is really your risk area. If you want to be long, short CAD and long yen, this is your risk area. If you start to move back up, not even up there to the spike, but if you start to move back up above 108.5, you may be at risk for a move higher. If you want to be short, you now want confirmation through 106.25 and 105.70 in the more medium term. If you want to be long, this is are your two risk levels, because look, this is also been an area of interest. 106.25. It's been a low here as well, 106.25. So watch that 106.25 as your first risk zone. And then, of course, if it goes back below 105.75, this is going to be looking pretty bad. So for the immediate term, I think this one to go down with the CAD being weaker, you say. So I suppose you look for a bit of a weaker a move down here. You need weaker data out of the US for one, because you're always going to have like a bit of a Americas versus the rest of the world kind of thing. So the CAD yen is probably going to move lower on worse US data as well. All right. So this is likely going to be the scenario. If you get better data, your dollar yen is probably going to shoot faster than any dollar CAD reaction. All right. So this is how I see this CAD yen for now, with a few levels here. You are going to be short. Okay. Yeah, I mean, look at those levels. Then, if you get really bad data out of the US, look at those levels. If they start to break, then you're probably looking at deeper moves down again. Um, I don't have much more to show. Ryan already showed the cable. Yeah, I'm giving it back to you, Ryan. I mean, it's going to react. Everything's going to be reactionary. But as
Yeah.
I said, my just traders' feeling right now is that we may get a bigger reaction if that number doesn't come out as bad
Yeah.
as some banks may expect.
Yeah, I agree wholeheartedly with that. That's a difficulty. How much of this selling is that number, and how much is just Jackson Hole and the market getting dovish over Powell? So at least we'll get one part of that question answered after this bloody number drops out later on, and yeah, we'll see what it does from there. Okie doke. We shall leave it there for today. Thank you very much. I'm off for the rest of the week, so I'll leave you in Kay's very capable hands. It's also bank holiday Monday, this coming Monday, so there will be no flow show on Monday either, just to let you know. So we'll get a little break. So I will see you Tuesday. As I say, we'll leave you in capable hands with K-Man. Have a good one, everybody. Stay safe, trade safe, and we'll see you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.